Okay, thank you very much. Just give you a brief introduction to Silver One due to the brevity of this talk. Silver One is a relatively new company, just been trading for about a year and a half. And this is a photograph of what is now our flagship property, the Candelaria Silver Project, located in Nevada. We do have 4 silver projects, 3 of them in Mexico, but as I said, I'm just going to concentrate on this project for this talk. A ubiquitous forward-looking statement. So essentially, as I said, we have 4 silver projects. Candelaria is becoming our flagship project. It's got a very large historic resource. It was 43-101 compliant, but because it's more than 3 years old, it's now deemed historic. We've got a good growth strategy. We want to initially look at this. Oh, is that better? Okay, what we want to do is initially look at potential production from the old heaps at Candelaria, and we've got a good management team, and we've got good financial backing as well. So this is our price history. It looks a little sad, what can we say, but we followed the path of a lot of the silver companies and the price of silver. But in essence, I put this up to show how we have progressed in terms of adding asset value and resources to the company. We did our initial deal about a month after listing. We put in 3 Mexican silver projects from First Mining Finance, gave them 6 million shares, making them our largest shareholder of the company. Also did a $2.5 million financing and a 3-for-1 forward stock split to increase liquidity. Moving forward, we realized that those silver assets in Mexico, although they are good, weren't quite company builders, so we ended up doing a 3-year option from Silver Standard on the Candelaria project in Nevada, past producing silver project. And that essentially we have moved forward from that. We did another financing last October, 4.3 million Canadian at 40 cents with an attached half warrant at 60 cents. And then we moved forward and drilled the old heaps in December of last year at Candelaria, put out some of those results that I'll talk about, and then we made the second payment to Silver Standard, now SSR Mining, in January of this year. These are the management and directors. I'm not going to really go into depth on this just because of the brevity of the talk. That's our share structure right now. First Mining Gold remains our largest shareholder. SSR Mining now has 4.3%. We have 2 more payments to them. They will entail essentially $1 million US each payment in Silver One shares. There's no cash payments to Silver Standard. Directors and management, 7.8%, and other key shareholders, about 35%. So let's talk about the Candelaria project itself. Location. It's in Nevada, right along the main highway. You can actually see that pit from the main highway. It's a past producer, produced up to 68 million ounces of silver historically. Started production in the mid-1800s. I'll go on to there. And it was a high-grade underground vein producer, oxide material. Average grade from the mid-1800s up to the late 1950s was 1,250 grams per ton silver. So very rich. It was the richest silver mine in Nevada. Then it went to open pit in the 70s, 80s, and 90s. The latest producer was Kinross. They shut it down in 1998 due to the collapse in silver prices. Silver Standard came in 2001, 2002, and they did a large drilling program, and then they bought it off of Kinross. With that drill program, they outlined a very significant resource. They also evaluated putting the old leach pads back into production, but with the very low silver prices, well under $5 per ounce, they couldn't quite justify it. It went on to their shelf, and it sat there for 15 years until we did a deal with them in 2017. This is the resource that they outlined, and if I can get this to work here, is this going to work? Oh, nope. I don't think there is a pointer on this, or is there? No pointer. Okay. Essentially, the resource, as I said now, historic, just on the northern margin of the 2 pits. In the northern margin of the Mount Diablo pit, measured and indicated resources totaling about 44 million ounces of silver. On other various areas, inferred resources of an additional almost 83 million ounces of silver. What's important in the inferred is that of that 83 million ounces, 48 million ounces still sits on the old heaps. Remember, Kinross shut down not because they exhausted the heaps, but because of the low silver prices, and then they handed it over to Silver Standard. That carries a grade of 1.29 ounces per ton on average, or about 40 grams per ton. This is extremely important. If we look at other essentially oxide leach operations in Nevada right now, Coeur Mining is mining the Rochester mine to the north of us, and they're producing at an average head grade of 13 grams per ton silver. We've got heaps on surface that don't need to be mined at 40 grams per ton silver. So we feel very optimistically that we will be able to move forward with a good assessment to see what is the best way to recover the silver from those old heaps. This is just a shot of the Candelaria. I'm standing on top of the Northern Bell Pit, one of the two open pits that produced. Essentially, you can see in the distance leach pad number 1, which is the larger of the two leach pads. For scale, you'll see a building with a small truck beside it, so a very large leach pad. There's a second one just tucked in behind the hill. That roadway is a paved road that comes in from the main highway 2 miles away, and there is a hydro line with an active which is still active. We have a substation there, and we have 2 water wells, each capable of producing 500 to 700 gallons per minute. So we've got water, we've got power, we've got good paved road, we've got resources, and I think we have a good opportunity to look at potentially putting those old heaps back into production. This is just a map. It shows the road coming in from the main highway up in the upper section of the map, not showing there. Go past 2 leach pads to the old processing site, and you'll see the 2 pits with the water wells down to the south. And the resource that Silver Standard drilled was just on the northern margin of those 2 pits. So there's the drill program we did last December. 730 samples were collected. We split them, we assayed them, and we just put out the information recently. The average grade of the heaps is actually 43 grams per ton based on the information that we now have, which confirms it. More importantly, the amount of cyanide-soluble silver in those heaps is about 56%. So essentially, there's a big silver resource there. We're just currently going through metallurgical testing. Another couple of months, we should have the answers as to whether this could be potentially economic. So the other opportunity that we've got at Candelaria is when Silver Standard drilled, they hit numerous high-grade zones at depth. Here's an example. You'll see the pit on the left, the resource just to the right of that, and way off to the right, 14 meters to 670 grams per ton silver. We think there's an opportunity for an underground high-grade zone. Also, what's interesting is historically, along strike from the 2 pits, there are all sorts of old adits, old workings, etc., and they have never been systematically drilled. We think there's excellent opportunity to increase the resources with additional drilling at Candelaria. So this is a crude timeline. We've done the drilling. We're currently in the MET testing. If that works out and we like the results, we're going to go to a pre-feas feasibility study. We start at baseline studies. If that works out, we'll start the permitting. And then, of course, we are looking at potentially being in production about 2020. In the meantime, we will be exploring the down dip high grade and the potential extensions to additional mineralization. And I'm just about out of time, so this is just why silver, undervalued silver prices, essentially gold-silver ratio. People like to talk about that. Last 40 years, it's been averaging between 50 and 60. It's now currently just below 80. And bubbles. Bitcoin seems to be one of the latest one. People are predicting it's going to go under $5,000. Usually good for gold when these things happen. And what are some of the drivers? U.S. dollar fluctuations, Dow Jones possibly coming off its high, and inflation and debt are certainly moving forward. And with that, just say these are some of the Silver One opportunities, and I have approximately 3 seconds for any questions. Thank you.